Hey Forex Militia, this is Parsival, and I'm just going to go over some of what I'm looking at this week in the Forex market. We had a very interesting week this last week with what was going on here in the U.S., in Washington, and some of the Georgia runoff, where the two senators that were going up for election were basically given to the Democrats. And then, of course, on Wednesday, we had the insurrection, the Trump insurrection. But the markets really didn't fluctuate that much from that. So with that, something actually did happen, I believe, on gold though, but I don't know if that was really because of what happened on Wednesday. But let's take a look at what's going on. All right. So in gold, on my weekly, what I have is the market. Right now I have two indicators that I'm using to call this, which is the Trader Dynamic Index, right? Traders Dynamic Index, and the stochastic with a moving average, an eight period moving average. All right. So what these indicators are basically telling me, and oh yeah, and the water Atar pivot, is that gold is looking like it's going to be moving down. This yellow line is what they call the market line, the market baseline, and then this is the trade signal line, the red one, and the green one is the RSI price line. And usually I have a good indication that the market is basically going to go down when something like this happens. The stochastic pulls back into like the overbought or oversold level, or it pulls back above the moving average while this is below the market baseline and below the trade signal line. So it's like it's loading up into a distribution zone when it's going down, and an accumulation zone when it's going up. So that's something that I've basically been using because I've been doing the testing on some of the strategies, and I got this TDI from Trading Made Simple. This one I made up myself, but that's what I'm using right now. And as you can see, we had a bounce off of prior support at 1775, and now that is a support that is in the way. Now I also had this at 1750. Let me see something. I want to put this at 1750 for a second and see if that still acts as a type of support. Let's see. Okay, it's a little bit off. Okay, it didn't go down to there. But 1775 seems to be the point. But this might be a little bit better. Okay, so the next spot that I believe that this is going to go to is probably 1775, 1750 in this area, and then the one below that is 1550. If it continues to fall, that also means that the dollar is gaining strength. And with that, that means that a lot of the currencies that are denominated with the dollar are going to basically fall. Let me just look at this on the daily to basically see what else is going on there. Alright, Now you also see something else too. This the gold basically just hit the 200, so it's kind of up in the air if this might bounce, or if it or it might break through the 200. As you can see on my TDI, it's breaking through the 50, which also gives me an indicator that this might actually go short. All right. I also wanted to do this. Let's see how far as Fibonacci goes, that this might fall. All right. So far, I see. Okay. So the price action here fell to about the 50. And so the next level, the 61 and then the 78. So let's see if it falls down to the 61. Because as you can see, over this way, there is some congestion, and a zone, an accumulation zone, right over here in this area, in this zone. So let me just mark that off. Let's get that. And right in this zone, there's some accumulation that might actually happen. So it might bounce around in there for a little while. Alright, let's go to Bitcoin. And on Bitcoin, we've been going up for a while. And if you look on the TDI on the weekly, you see some very nice pullbacks that this is giving. All right, with the TDI. One other thing, I actually, just so you guys might want to use this, it's called the TDI RT alerts and divergence, and I put the price line, the RSI price, on smooth, and the trade signal line on smooth. So that's the green, the RSI, and the trade signal line, the red, on smooth. And the rest I left alone. Alright. So as you can see, this pulls back somewhat into giving you a nice area, excuse me for that, I guess I'm a little bit tired, into an accumulation zone that you can accumulate over here, and then again over here, and then after that it breaks above the Watt-hour pivot and it goes long. Okay, so I'm going to take this down to the daily and take a look at it and see what this looks like. Alright, so what this looks like is, it looks like it's going to really go short for a while. I mean, I can't say short, it'll be a medium term short. One thing that I did not go over, and I did want to basically, did want you to look at this, is on gold. Okay, stop doing that. There we go. On gold, the sentiment is long. So we know, as sentiment traders, or sentiment analysis, in sentiment analysis, we should go short, and that is what this arrow basically is looking like. We're going against what the retail traders are doing, and with technical analysis, we are looking at this to go short. So that is something else that we can add to our confluence of indicators to give us a direction. Okay, so on Bitcoin here, this I believe is going to a medium term short, but let's just look at, let's see if we can find an area. Let's go back to here. Wow, that would be something. And look for, and usually oops, let's get that back. and a pullback to 25,000 on the weekly. That would be a far ways, but it would most likely have to get to this pivot right here, which is the monthly pivot. So that's a long ways to come back. But as volatile as Bitcoin is, that could definitely happen. And looking at the way how this RSI is way up here in the 90s, what is that at? That's, yeah, in the 90s, way up here, 90, 89, 90. That could definitely come all the way back down and then find some consolidation and then start to go back up. So once again, that is the dollar raging back. All right, so here we have oil, or WTI, and on oil, it's been going up steadily since June. And this yellow line right here is the Wada of Tar pivot, the monthly, and it's just been going straight up. And now you see it basically got to 50. It got to where the 200 moving average is at. And as you can see over here, the TDI has been going up along with it, and it hasn't been crossing down. On the lower time frame, on the daily, it crossed down, and we've got some divergence coming in, which basically is saying that this move is losing some steam. So I would guess, since the dollar is actually gaining some steam, that the that oil would basically probably might actually fall this week. Over to the CAD, on the weekly, we see that it has been nothing but a downtrend, with the RSI price line falling below the 50, and this is nothing but downtrend. You see here there was a large pullback, which possibly would have given you a signal to look for a downtrend, possibly on a lower time frame, right? If you basically look at the two time frames, that's on the weekly. Let's mark that off and see what that would look like on a lower time frame. Let's see, it's red. And right, on a lower time frame, on the daily, with that pullback, you would be looking for, I would most likely take it once it actually falls below. There's a possibility here or here, and then put my stop most likely somewhere up here. Of course, that's cherry picking, that's hindsight, you know what I mean? But yeah, either here or here. There's a possibility that I don't see it here. I don't have my ATR up here, but I might actually go with an ATR 14 that might give me a better daily stop loss that I would multiply by 2 or 1.5 and give me that, so I can get a decent reward on that one. So from here or from here, all right, and then it would cross up there, and but it wouldn't stop me out, and it would go down, down, down. Now, something that I will do on the daily is I will look for when I will use the Fibonacci to basically find spots to take profits. One thing that that's another thing that I would also do. I would also measure this out to see how far this pulls back. And I'm going to change the color on that. Let's see. And so this pullback goes up into like the 50-61 area, as you can see that right there and there. And so let's see. So I would most likely take this down to 125. So here you have on the, okay, this is the thistle colored one. It's this thistle. It takes it up to about like 50-61. So most likely I would take this down to either 125 or 150. So it definitely makes it to 125, and it definitely makes it down to the 150, even the 161. But I would probably take it to the 125, and then take my profit. And that's how I would do that. Let's see. And that's on the daily chart. That's alone. Something I did not do. Let me see what that. Let me also see what that might, what type of pips that might entail. So let's just take it from, let's take it from here, and going down to 125. Okay, I better put that back on. From here to about 125 would get me about 375 pips, which is nice. It's pretty nice. One other thing that I didn't even realize that was there. This is support. So right in this area would be perfect for me to take my profit. Let me just see. Just gonna open that up a little bit more. And that's there, and that's there. So yeah, right in this area would be a perfect place to take my profit. I might even take it right here at the support, but being that this is 125, I would probably take it somewhere down here, a little bit closer, just a little bit off. So that would be about 375 pips. So that's hindsight. Of course, it all looks good. Anyway, moving on, right along. On the euro, all right, we have this here. We have a nice little pullback coming back into the market line right here, and then a little bit right here. So if we draw I'll need to see. Oh, and then the other thing is, on the weekly, you see this here, there is divergence. Now, divergence doesn't necessarily mean that it will pull back because of divergence, but you know, that definitely does mean that there's less strength going into this move here. And I guess because this is the dollar, a dollar pair, that the euro is looking to basically fall somewhat, to come back down, because the dollar looks like it's going to be gaining strength this week. So let's go ahead and look and see if, you know what, let me just go down to a lower time frame. And here we have something that I've noticed about the TDI is, if you basically have the RSI price line falling below the market line and you get a pullback with divergence, that definitely means that the market is going to fall. Now, I would wait until this falls below the 50 to really take a position. And most likely when it falls below this 50, it'll probably fall also below the monthly pivot. But you know, it's one of those things. I don't have the statistics for you guys, but I will say that there's a high probability that it will continue to fall. And let's take a look also for these two. First, let's see what the sentiment is on the CAD and what is on the euro. So let's go ahead and take a look. First, this, and we have this going long. Yeah, that's this over here. We have this going long, so the census from a lot of the brokers is that this is going, the retail traders are long, and so we get this, the CAD going short. All right, so that's the sentiment on the CAD, and then on the dollar, the euro, on the euro, we have the sentiment on the retail traders going short. So it says that we should go long on the euro. Okay, now that kind of conflicts with what I'm basically saying, what I see on the chart that is about to happen, right? So which one should we basically look towards? All right, so the euro, basically this is more of a short term basis when you look at sentiment. All right, when you look at the charts are more of a medium to long term analysis. They give you a medium to long term view of what is basically going to happen with a currency. All right, so most likely I would go with what is going on the chart. So since I see that this is basically going to go short, I would be preparing for a short and then see if the sentiment basically changes over time. But as you can see, most of the retail traders are actually long, or short, I'm sorry. And basically they're looking, the sentiment would say that to actually go long instead of short. Now, I don't know if I said that right. Most of the retail traders are short, so we should go long. All right. But on the chart, what I'm seeing is this divergence, and then of course, if it falls below here, and this falls below the 50, that's a good signal to take this short. To where? Let's see to where. Let's see. I am going to take this to, it looks like, okay, now there's here. This is one area of some consolidation. That's one. And then this other area down here is another area of consolidation. Right below the 61 in this area, the 61,678. So if you want, you can actually put two targets, one here and one here. All right, moving right along. On the pound, another dollar pair, I would basically say that most likely the same thing is going to happen. Looking at the lower time frame, and do I actually see divergence down here? I don't see divergence like I saw it on the euro. Let's see. No, it's just about the same, just a little bit of divergence. And then once again, if this crosses below the monthly and definitely below this 50, then once again, like I said, the dollar will most likely gain, and there will be a retracement back into, let's mark this down, let's see what that looks like. Okay, let's just go to right there. Let's not go to there. Usually when I basically have this on here, the stochastic, I do not count divergences. I basically just measure from here to here, but if I see divergence like I see here, I don't count the divergence, and usually that comes out a little bit better. So this from there to there would mean a falling back to most likely this zone over here between the 50 and the 61. So that would be in this area, this zone right here. That's where I would place my first target, and there could be a second target down here, but that's where I would place my target. And that would be about, if this comes below, depending on where this actually begins over here, it's about 134 pips. Now to the the pip stealer, the dragon. One thing, yep, let's take a look at that. Let's take a look at sentiment, and sentiment says that it's pretty balanced. I do not consider the sentiment to actually be strong unless these numbers are more of 60 and 40. So a 60-40 split would tell me if there's strong enough sentiment to actually call it in either direction. Now this is saying that this is going to go up, but I don't call it that unless it's 60-40, either on either side. Right now, this is basically flat neutral to me. Like these over here, it's basically flat. It's pretty neutral. So until that actually happens, I'm going to say that the sentiment on the pound is neutral. All right, so let's go ahead and move on to the, well, and like I said, on the chart, looks like it's going down. On the pound yen, we have this looking like it is going up. Okay, it is still below this 200, but because I see the RSI price line above the 50 and the price also above the monthly, I would consider this long. Taking this down one level, we see this above the 50 also, and we see a lot of consolidation in this area. So this is going to be very tricky to basically trade, but so it would actually be smarter for you to trade it on a lower time frame, like the hourly. As you can see more price action, or the 15, which will give you even more, right? So I would say the hour and the 15 because of all the chop that's going on here. Now, if you're trading, like I would say, if you're really swing trading, then you would basically get in. You would have missed your entry would have been someplace over here, and you would take that going. You would still be long. So what day is that? That is 11/8. So that looks like that's over here somewhere. Yeah, somewhere over here. You would have been over here, and you would just be holding it with your stop somewhere down here, right? And you would be looking for a exit. Let's see what this is telling me to do here. If we entered over there, you might already be out of this trade because it looks like it's pretty. No, I could not say that. It would have to be someplace over here then. If you entered here, you would have to give yourself enough space, and that would be here and here. Nope, there's a little bit of divergence. So, see, there's a little bit of divergence, so to right to there. So, if you entered here, your target would most likely be here. Since it's a jump in there. And so that would be, I would basically target 144.52, somewhere in that range, up there. Okay, and I'm going to do one more, and I'll just go ahead and I'll look at the S&P 500, something else that I basically look at. All right, now on the one thing here, Look at that. On sentiment, there you go. You have a 60, basically 40 split. 39, right? 60, 40, 39. And the sentiment, the short term, has this going long. And that's exactly what I have going on over here on the charts, on the chart analysis, okay, the technicals. All right, so here we are with the dollar yen, and the dollar yen is looking very, very bearish. All right, you have it below the 50. You have most of this below the monthly. Now this went above the monthly, so in my trading, what I would not do is I would not trade this, but I could actually go down to a lower time frame and see exactly what we're looking at. Now down here, the TDI is above the 50 and above the monthly pivot. So I would actually look to take this going long, which falls in line with me believing that the dollar is going to basically rally during this week. So let's take a look at what it looks like on sentiment. With it's basically 50-50, right? It's basically flat. This is saying short, but this is not that 60-40 cut. That's that 60-40 split. So this is pretty flat. So that means that it's changing over, with most people going long, saying that this is short. So what I believe is going to happen is that this is going to move this way, that they are actually going to go short, and then the sentiment will be taking this long. The sentiment will be taking this long is right. All right. But on this chart, what I would call this as, I would call this going long, and I just need to see where that's taking that to that. Is there divergence? There's a little bit of divergence. So from here to here. All right. Let's scrape that down. And I would take this to look at that. On the 125, you have a resistance line, a resistance line. So I would take it around to this area, which is over here. You know, that's if I would have picked it up here, then that would be about 137 pips. If you pick it up here, that would be about 100 pips. Your stop loss, of course, right, would be somewhere below here. So this way it might actually come out to be something like a 1-to-1. Yeah, that's about 123 pips. And below here, that's about 90. So if you took it all the way up to there, that would be that. So that's my call on just a couple of the currencies this week. Now let's just take a look at the weekly, what the S&P 500 is basically doing. Hey, just to cut in here, I am promoting a software called TradeMiner for Forex, for stocks, and for futures that I would like for you guys to take a look at. It basically gives statistics on the markets of past data, which lines up with some accuracy on the direction of trades, from about 75 to 100%. Okay, so this is a past trade that I was looking at that came up, and it was from December 28th to January 5th. And I didn't actually take the trade, but as you can see here on TradeMiner, it fell from about 103 close 103.58 all the way down to, on the close, to, come on, bring it up, give it to me, to 102.76. So that was basically about 100, no, let me see, about 50 pips, I'm sorry, about 50 pips. So that's pretty decent. What is that, 58, 76? No, that's about 70 pips. Let's go to charts and let me just take a quick look at what this did. Okay, so on the chart, we basically have the time frame from when this actually happened, right? So as the software would tell you, it would basically tell you to take the trade from the 28th, from the start of date on the 28th all the way down to the end of day on the 5th, and that came out to be about 85 pips. Now as you can see, there was drawdown here of about 34 pips. So to basically give yourself an idea of where to put your stop, what you would do is, and what I do is, I basically look into the average drawdown with the average pips, right? And then I find how much it actually is, and I take the max draw plus the average pips, I put that into my calculator, and then I divide by 2. So 253 plus 54 equals, and then divide that by 2, equals 153. So I would put my stop at 153 and a half. So let's see what that looks like on the charts. So from here, once you get in, right, somewhere around there, you would put it at 153 pips. That is way up here. That is way out of the way of there. Okay, now the kill point on that is the risk that you're taking, right, is not as much as the reward that you're getting. That actually is a upside down risk to reward. On this trade, it says that you have an 80% chance to basically make a profit on this trade. I will show you that. Actually, a 75% chance with 10 years of data, no less than 5 days, no more than 25. So on that, with the risk reward, with the risk that I put on there, this would be somewhat of an upside down trade. But if you trade it correctly, there you go. You would still make some pips. Now, of course, you could trail up the stop as it goes down. So that's something that you could basically do. The average amount of pips that this trade is going to make is, average profit is about 68. So depending on your, depending on if you want to take this trade, you would basically put your stop at the 153 and you would expect about 68. That, I would say, is not a very good trade. But with the certainty of this actually coming out to with the 80%, the 75% to actually complete and give you pips, you might want to just put on a small trade to basically see if you can get some pips. It all depends on how you want to trade it. You don't have to trade with my method of basically getting a stop loss, right? You can find something like this, right? You see this here, you see this stop right here, you can basically put it up here or put it up here. It's your choice, but that's me. I'm trying to give you some weapons in your arsenal so that you can actually have better trades taken to increase your account. All right, now back to my weekly outlook. As you can see, it's above this pivot right here, the water Attar pivot, and it's staying long. With the dollar basically rallying, I'm not sure exactly how that is going to affect the markets. Now, that could mean, since the dollar is gaining, that people are rushing towards a safe haven. That means risk off. Okay? And if that is basically happening, then the market will basically fall this week. So let's take it down to a lower time frame. And what I'm seeing here is there's no divergence, and this looks like it's going to continue to be long, right? So Monday you might have a pullback going into this week. But knowing what's going on in the stock market, the big earnings will start coming the 15th, like Friday and into next week. So the pullback might be in preparation for the earnings that is coming up going into next week. And that's basically the big boys preparing for, I believe, a rally. So they're basically setting the market up for a retracement, a small correction, and then into a rally. And that's it for my weekly outlook for the week of, let's see, the 11th to the 15th. This is Parsival, signing out.